So today I'm going to talk about a subject that I wanted to talk about for the last few days, but I've just been doing a bit of video catch up, so I've not been able to get to it, but I am now. And I'm going to talk about something that has to stop. And it has to stop because it is just stupid and unreliable and incorrect information that's being put out there. And I don't know if it's just that this is being put out there to cause manipulation, just for share prices to go lower so people can buy the company, or they can buy the company at cheaper prices, or generally people are actually this stupid. And I actually think it's the second reason. Like, it's scary to see that people are putting this information out there, analysts are putting this information out there, which is what we're going to be focusing on, that is incorrect or just awful. I don't understand how you come up to that logic to come out with that answer. And the crazy thing is that these people are paid to do this. They are supposed to be the cream of the crop, and they're coming out with absolute garbage, and it's frustrating and it's annoying and it's stupid, and it needs to stop them coming out with this. And it's going to be around, I'm going to be talking about this stock, Hims and Hers, which is a stock that I own, and it's been doing quite well recently, but it's not really about Hims and Hers. I'm actually talking about another subject, and more focused around analysts. Now, analysts, people ask me all the time about analysts. They're like, what do I think? Or, they put this price target on. And I say, like, a lot of these analyst price targets, they're all set for 12 months' time. Now, in 12 months' time, they could hit that share price. But more than likely in 12 months, anything can happen. Stocks will go up for no reason in 12 months. Stocks will go down for no reason in 12 months. And major events, the CV situation, and to be fair, you'd think the CV situation, stocks would be lower in 12 months and they're all higher. You look at the Ukraine situation, who would have thought that would have happened? And obviously events come out of nowhere, and that can more than likely dictate share prices more than anything in the next 12 months. But it's very hard to get 12-month price targets right. So many things can happen in the short term. And I say that myself. People ask me to try and predict the share price in 12 months. I'm like, I don't know. Anything can happen in 12 months. So 12-month price targets are pretty useless. But even given that, there's got to be some sort of foundation, some sort of fact or some common sense of realistically, if we have a very steady market with no major catalyst, where will the share prices be? And I'm seeing analysts and analysts that for big companies coming out and putting garbage out there. I don't understand how they're coming to these sort of price targets. And this happened this week with Piper Sandler. So they reaffirmed a hold rating. Fair enough, a hold rating on Hims and Hers. Now, the problem is when you look at the history of this person that is bringing out this information, and this actually on the day moved the stock down, and I don't understand who's following this going, oh, they said that this is a hold and this is the price target, maybe I should sell. And they changed the price target from $11 and this was from the $12 that it had previously. So they basically think the stock could go up around 10-20% from here. So they think the stock's going to go up, but not by much. So they downgraded it, okay? I've got no problems with that. The problem is that when you are still trying to follow on and talk about a stock when you have been trying to do this previously, when you have always trying to be pushing down a stock for some reason. So an example of this was the same person, once again, they bring out a downgrade on this stock and said there's going to be challenges in meeting Wall Street's forecast, and they brought this out in October time. So the same company, Piper Sandler again, downgraded the platform to neutral from overweight, and they said that they project the company projecting 74 to 78% is going to be hard for them to meet the Wall Street expectations. And you can see here they slashed the price target from $8 down to $6. Now, obviously, if you listen to this here on October time, this would have not paid off very well for you, because obviously since that time frame, even if we take the recent dip in the share price, the stock is down. Well, you still would have been up 105%, and at one point you would have actually been up nearly close to 200%. So someone like this that has previously commented on the stock saying this is going to go to $6, and the stock then rallied up from here. And you look at this sort of person, the Piper Sandler, and the person that's covering this stock, you start questioning what credentials do they have to cover this. We've seen a horrible take previously, and yet then they follow up with another take. And the really weird thing is that the stock was down a little bit on the day of this news. It probably would have been for this reason why. And it's like, why are people listening to this information? Why are people like this, Corinne Wolfmeyer, allowed to talk or cover this stock? And why are they allowed to come out with these targets that are just terrible targets? And why is the Wall Street then react to these sort of targets? It's like when you look at the portfolio of this person, the research analyst at Piper Sandler, and then you look at the track record, and you can see here, if you go on tip ranks, this Wall Street analyst here has 1 star out of 5, and their success rate is 31%. I mean, that's not even 50-50. That generally says that you are very bad at picking stocks. And you can see here the average return rate is a negative 3.4%. So why is Wall Street and investors panicking about these share prices and share price downgrades? And why are people like this? Why is someone that is paid at this high level, that has 1 star out of 5, that is currently ranked 6,683 out of 8,000 analysts, and has a 31% success rate? How are they still allowed to cover these stocks? How are they allowed to bring out this garbage in October time? And I remember when this came out in October time. When this came out in October time, it wasn't as bad as this on the week just gone, and the stock was down like kind of 2-3% on this news. You can see here since that time frame, it could have been the root cause why it's actually dropped even down a bit lower, down 8%. When they last talked about the stock, and it said that it's going to majorly underperform, this caused the stock to go down nearly 8% on the day. And then from there, they brought out their earnings. You can see here they beat on the profit point of view, they beat on a revenue point of view, they smashed expectations, these expectations that were apparently going to struggle to meet, and they've just done it once again in the recent quarter, in the Q1s as well. And it's like, how are these people allowed to have a position like this? How are they allowed to have a position like this with such a poor track record? How are they once again allowed to cover this stock after such a poor performance previously, and then still continue it? And then how does Wall Street go, that Corinne Wolfmeyer at Piper Sandler, that one that's ranked 6,683 out of 8,000, that has a 31% success rate, 1 star? Yeah, we should probably listen to her. Maybe we should probably maybe trim back our position. It doesn't make sense. It doesn't make sense why Wall Street does this and reacts to this. And it doesn't make sense how people like this are in a full-time job covering stocks. It doesn't make sense. And this needs to be resolved. There needs to be some sort of situation where people like this, that are just this bad at stocks, aren't allowed to cover it for a full-time job. And like I said, I don't actually think it's manipulation. I don't think people are actually trying to push the share price on purpose to buy the stock cheaper. Sometimes I think that is the case. But with this sort of position here, when they have such a low hit rate, I just think people are generally this bad that are allowed to get into the stock market, which is just absolutely, someone that is able to get such a high profile role at a high profile company is allowed to have this much power. It's absolutely crazy that these sort of people are on Wall Street. So, I just wanted to make you guys aware of this. I wanted to make you aware of, personally for me, why I don't pay much attention to analysts, why I don't pay much attention to analyst price targets, and the sort of record that some of these analysts have when they are delivering these price targets. Normally, when I do have a look at price targets, there's a couple of times I do go onto tip ranks and have a quick look to see how some of these guys are doing, that are guys or girls that are doing, and setting ththese price targets. If it's someone with quite a high hit rate, I'll have a little bit more respect on this. But this is why you've got to be really careful when you're taking a lot of these analysts and price targets with a pinch of salt. When analysts are commenting on stocks, especially when they're commenting on stocks like after earnings as well, this is why it's really important to have a pinch of salt, because a lot of times they could be talking out the backside, and this is a prime example of someone that just generally I would be looking at a career change, because you shouldn't be talking about stocks with a 31% hit rate. That's absolutely terrible. So yeah, just wanted to make you guys aware of that, and also hopefully saves you from making a mistake and listening to these things that kind of go on in Wall Street anyway. So hope you enjoyed the video anyway, guys, and I'll catch you in a bit.